All right, so today, let's dive into something I think you'll find interesting. We're talking about turning $5,000, into some serious profit by investing in those growth stocks that are currently near their 52-week lows.
Right. Yeah, that's definitely something that gets a lot of investors interested.
Yeah.
And we're going to be taking a look at an article from the Motley Fool.
Okay.
And they highlighted 3 companies that they believe are poised for a comeback.
Yeah, what's really cool about this article is that each company represents like a different sector, a different story. So let's unpack this analysis and see what we can learn. Where do you want to start?
Well, let's start with Advanced Micro Devices, better known as AMD.
Okay.
They're a major player in the tech world, but they've been kind of overshadowed by their rival, NVIDIA.
Right.
Particularly in the booming field of artificial intelligence.
Yeah, NVIDIA has been getting a ton of attention for their AI chips.
Yeah.
So where does AMD fit into all of this? What makes them a potential investment opportunity?
Well, it's interesting because while NVIDIA has been focusing on the high-end market, AMD is taking a different approach.
Okay.
They're targeting a broader audience by offering more affordable AI chips.
Oh, okay.
Which, it's a strategy that could be quite savvy when you consider that not every company needs or can afford the absolute top-of-the-line solutions.
So instead of going head-to-head with NVIDIA in the premium market, they're trying to carve out their own niche by appealing to a wider range of customers with these budget-friendly options.
Precisely.
Okay.
It's a bit like the cloud computing market.
Yeah.
You have the companies that need the absolute bleeding edge, but there's a much larger segment that prioritizes cost-effectiveness.
Yeah.
And that's where AMD sees the opportunity.
Okay.
The article highlights that AMD is also preparing to roll out a new AI chip called the Instinct MI325X, which they believe could be a game changer for them.
Okay, so they've got this new chip coming out. They're focusing on affordability. But the article also mentioned that their revenue growth, while decent at 18%, is significantly lower than some other AI companies that are seeing their revenue double or even triple.
Yeah.
How do we reconcile that?
That's an important point. While AMD is making progress, they're clearly not growing at the same pace as some of the industry's high flyers.
Right.
So the question for investors is whether AMD's strategy will be enough to close that gap and deliver the kind of returns they're looking for.
So it sounds like there's a lot of potential with AMD, but also some uncertainty.
For sure.
They're trading near their 52-week low, which might be enticing for some investors, but also suggests that the market isn't entirely convinced about their future prospects.
Exactly. Investing in AMD right now really comes down to your risk tolerance and your belief in their ability to execute on their strategy. It's a classic case of weighing potential rewards against potential risks.
All right, let's move on to our next company. This one is Amgen, a pharmaceutical company that's been making some interesting moves, including a major acquisition, but the market hasn't been too excited about them lately.
Yeah.
Why is that?
Well, one of the things that makes Amgen's case so intriguing is they're entering the GLP-1 drug market.
GLP-1s.
Yes.
They've been all over the news recently.
They have.
People are really excited about their effectiveness, but with so many companies already in this space, what makes Amgen stand out? What are they bringing to the table?
Well, their GLP-1 drug called Maritide has a unique selling proposition.
Okay.
It potentially requires less frequent injections than its competitors.
Oh, wow.
While achieving similar weight loss results.
Oh.
We're talking about monthly injections versus weekly.
Wow.
Which could be a significant advantage in terms of patient convenience and compliance.
That's a big deal. Fewer injections would definitely be a plus for a lot of people.
Right. But didn't Maritide recently hit a bit of a snag in its clinical trials? Something about not meeting a weight loss target.
Yes, that's true.
Okay.
Maritide didn't quite achieve the ambitious 25% weight loss target that some analysts were hoping for.
Yeah.
And that has led to some skepticism among investors.
So is this a sign of deeper issues with the drug's efficacy, or is it just a minor setback?
That's the million-dollar question.
Yeah.
Drug development is a complex process, and setbacks are not uncommon.
Right.
Even without hitting that specific target, Maritide could still be a commercially successful drug if it's approved.
Okay.
But it's definitely something that investors need to consider carefully.
especially since Amgen's stock is trading near its 52-week low.
Mm-hmm.
Is that a sign that the market is overreacting to this setback, or is there more to the story?
Well, the Motley Fool article suggests that Amgen's stock is currently undervalued compared to other companies in the GLP-1 space.
Interesting.
But it's important to dig deeper and understand why the market is reacting the way it is.
Is this a buying opportunity, or is there more to the story?
Okay, I'm definitely intrigued by Amgen, lots to think about there.
Yeah.
Let's move on to our final company, Prologis.
Okay.
This one is in a completely different sector, logistics real estate.
Exactly. Prologis is a real estate investment trust, or REIT,
Okay.
that owns and leases out warehouses and distribution centers.
Okay.
They're a crucial part of the e-commerce ecosystem, and their stock is currently trading near its 52-week low.
Interesting. If e-commerce is still booming, why is Prologis trading at such a low price?
It seems that broader economic concerns are weighing on investor sentiment.
Okay.
But Prologis has some strong points in its favor.
Okay.
For one, they have an incredibly diverse customer base
Mm.
across multiple sectors,
Mm-hmm.
which provides them with a level of stability that many companies lack.
That makes sense. They're not overly reliant on any one particular industry.
Right, and they've been performing well financially.
Okay.
The article points out that Prologis has more than doubled its profits since 2020.
Wow, that's pretty impressive considering the economic ups and downs we've seen recently.
It is.
So, is the market overlooking Prologis's potential? Are they being undervalued because of short-term fears?
That's the question the Motley Fool is posing.
Okay.
They believe that as e-commerce continues to grow, Prologis could be a stealthy opportunity for long-term growth.
Interesting.
But it's important to look beyond the hype and consider the risks as well.
Absolutely. With any investment, due diligence is key.
Right.
We need to understand the industry, the broader economic context before making any decisions.
Yes.
But I'm already adding Prologis to my research list. This is exactly the kind of deep dive I love.
It's fascinating how a single article can spark so many thought-provoking questions and potential investment ideas, isn't it?
Absolutely. But before we get carried away, it's crucial to remember that this is just one source.
Right.
And like any investment decision, thorough research is key.
Yep.
Investing always comes with risks, and these companies are no exception. What do you think is the biggest takeaway for our listener today?
I think the biggest takeaway is the importance of going beyond the headlines.
Okay.
These three companies, AMD, Amgen, and Prologis,
Yeah.
all present intriguing possibilities. But it's up to each individual investor to do their homework,
Right.
weigh the risks and potential rewards, and decide if these opportunities align with their investment goals and philosophy.
Well said. You've given us a lot to think about. And remember, everyone, we're just scratching the surface here.
Yeah.
The Motley Fool article is a great starting point, but it's just that, a starting point.
Yeah.
There's a whole world of information out there waiting to be explored. We'll be back with part 2 of this episode soon.
Sounds good. It's true. We've got the continued rise of artificial intelligence with AMD, the growing demand for weight loss solutions with Amgen, and the persistent growth of e-commerce with Prologis. It's like a snapshot of where the action is.
Exactly. And it reminds us that even in a volatile market like the one we're in right now, there are always opportunities to be found. But as we've been discussing, those opportunities always come with a certain degree of risk. That's why it's so important to understand not only the companies themselves, but also the broader context in which they operate.
Absolutely. And that's what we're trying to do here, help you see the bigger picture, connect the dots, and ultimately become a more informed and confident investor.
Speaking of connecting the dots, I was thinking about something you mentioned earlier about AMD's strategy of offering lower-priced AI chips. It made me think about how sometimes being the underdog can actually be an advantage.
That's a great point. Oftentimes, the companies that capture the most market share aren't necessarily the ones with the flashiest or most expensive products. Instead, they're the ones that find a way to meet the needs of a broader audience. They understand that not everyone needs or can afford the premium solutions.
Right. And it's not just about price. Sometimes it's about offering a different approach, a different value proposition.
Exactly. And in AMD's case, that approach could be their key to carving out a significant chunk of the AI market. Not every company needs or can afford those cutting-edge, ultra-expensive solutions that NVIDIA is known for. AMD is betting that there's a large enough market for more affordable, more accessible AI technology.
And that could be a smart bet, especially as AI continues to become more pervasive in various industries.
Absolutely. Now let's shift gears for a moment and talk about Amgen and their foray into the GLP-1 market. I found this to be a particularly interesting case study.
Me too. Weight loss is such a hot topic right now, and these GLP-1 drugs seem to be revolutionizing the way we approach it. But what really caught my attention was the detail about Amgen's drug Maritide potentially requiring less frequent injections than its competitors.
Right. That seems like a huge advantage in terms of patient compliance and convenience. And it speaks to the innovation that's happening in this space. The fact that Maritide might be able to achieve similar weight loss results with fewer injections could make it a very attractive option for both patients and healthcare providers.
But as we discussed earlier, there was that setback with the recent trial results. Maritide didn't quite meet the weight loss target that some analysts were hoping for. How big of a deal do you think that is? I mean, could this derail their plans?
It's definitely something to watch closely, but I wouldn't write Maritide off just yet. Drug development is a complex process, and setbacks are not uncommon. Remember, even if it doesn't hit that specific target, it could still be a successful drug. The key is understanding how it performs in the broader context of the market and the needs of patients.
Right. It's all about perspective.
Yeah.
And it's worth noting that the Motley Fool article pointed out that Amgen's stock is currently looking pretty undervalued compared to other companies in the GLP-1 space.
Yes, that's an important consideration. It suggests that the market might not be fully appreciating Amgen's potential in this market. Or it could be that there are other factors at play that we need to investigate further.
Exactly. And that's where our deep dive really comes in handy, right? By going beyond the surface level news and delving into the details, we can start to spot those potential opportunities and make more informed investment decisions.
Precisely. It's all about gaining that deeper understanding and seeing the bigger picture. All right, let's turn our attention to our final company, Prologis. I have to admit, I wasn't overly familiar with the world of logistics real estate before diving into this article.
Me neither. But it's actually quite fascinating once you start to peel back the layers and understand the complexities of how goods move around the world. Prologis, as we learned, is a major player in this space, owning and leasing out warehouses and distribution centers that are absolutely essential to the e-commerce ecosystem. And here's what really surprised me. They've more than doubled their profits since 2020.
It's an impressive feat, especially when you consider the various economic headwinds we've experienced in recent years. It really speaks to the strength and resilience of their business model and their strategic positioning within the market. What I find particularly compelling is the fact that their customer base is so diversified. They have clients across a wide range of sectors, which provides them with a level of stability that's really attractive from an investor's perspective.
Right. It's like a diversified portfolio built into their business model. They're not overly reliant on any one particular industry, which helps to mitigate risk.
Exactly. And then, of course, there's the fact that they're so deeply embedded in the world of e-commerce. As more and more shopping moves online, the demand for Prologis services is likely to continue growing.
Which begs the question, why is their stock currently trading near its 52-week low? If the fundamentals of their business are so strong, why isn't the market more bullish on them?
Well, as we discussed earlier, sometimes market sentiment is driven by broader economic concerns rather than the specific performance of individual companies. It's possible that investors are worried about a potential slowdown in e-commerce growth or broader economic headwinds that could impact Prologis' business.
So is this a case of the market overreacting? Is Prologis a potential bargain for investors who are willing to take a contrarian view?
That's a great question. And it highlights the importance of doing your own due diligence.
Oh, yeah.
Don't just take the Motley Fool's word for it, or ours for that matter. Dig into Prologis' financials, understand their business model, and consider their prospects within the broader economic landscape.
Exactly. Informed investing is all about asking the right questions, gathering the necessary information, and then making your own judgment call.
Absolutely. And remember, investing in the stock market always carries risk. There are no guarantees. But by doing your research, understanding the companies you're considering, and being aware of the broader market context, you can make more informed decisions and hopefully increase your chances of success.
Couldn't have said it better myself.
Right, we've covered a lot of ground today. We've unpacked the Motley Fool's analysis of AMD, Amgen, and Prologis, and we've explored the broader themes and trends that make these companies so intriguing.
We've talked about the AI boom, the rise of GLP-1 drugs, the resilience of e-commerce, and the importance of looking beyond the headlines and doing your own research.
It's been a fascinating discussion, and I'm sure our listeners are eager to hear what else we have to share. But before we get too carried away, let's take a quick break. When we return, we'll wrap up our deep dive with some additional resources, some final thoughts for our listener to ponder.
Okay, so we're back and ready to wrap up this deep dive into the Motley Fool's picks
All right.
for growth stocks that are near those 52-week lows.
Yes.
It's been a really great conversation, and
Excellent.
ready to synthesize all this information.
Yeah.
I think a good place to start wrapping things up is by connecting all of this back to the bigger picture. We've been focusing on these individual companies, but it's crucial to remember that they exist within a larger market context.
Absolutely.
And that context can have a significant impact on their performance.
For sure.
There are a number of macroeconomic factors
Yes.
that investors need to be aware of, especially in a volatile market like the one we're in.
Right.
So we talked earlier about how general economic concerns are weighing on investor sentiment.
Yeah.
What are some of the other big picture factors that might be influencing these stock prices?
Well, interest rates are a major one.
Okay.
When interest rates are rising, as they have been recently,
Right.
investors tend to become more risk averse.
Okay.
They start looking for safer places to park their money,
Yeah,
which can drive down the prices of growth stocks.
that makes sense.
Yeah.
Growth stocks are all about future potential, and
Wow.
when the economy is uncertain, that future can feel a little shaky.
Yeah,
So investors might be less willing to bet on those companies that are still in that growth phase.
exactly. And then there's inflation, which is another factor that's been weighing on the market.
Yep.
When prices are rising,
Right.
companies face higher costs, which can eat into their profits.
Yeah.
That can make investors less enthusiastic about their growth prospects, especially for companies that are sensitive to changes in input costs.
So it sounds like we're in a bit of a perfect storm situation for growth stocks right now.
It's a challenging environment.
Rising interest rates, persistent inflation, general economic uncertainty.
Yeah.
No wonder these companies are trading near their 52-week lows.
It is a challenging environment, for
Yeah.
sure. But as we've discussed, challenging environments can also create opportunities.
Yeah.
For investors that are willing to do their research and think long term,
Yeah.
there could be some real bargains to be found.
So let's say our listener is intrigued by one or more of these companies.
Okay.
What are some next steps they could take to learn more and decide whether to invest?
First and foremost, I would encourage them to go beyond the headlines and dig deeper into the company's financial statements. Look at their revenue growth,
Yeah.
their profitability, their debt levels, all the key metrics that give you a clearer picture of their financial health.
Yeah, numbers don't lie. They can tell you a lot more about a company's performance than just reading a news article or listening to a podcast like ours.
Absolutely.
Yeah.
And in addition to the numbers, it's important to understand the company's business models.
Right.
What exactly do they do? Who are their customers? What are their competitive advantages? What are the potential threats they face?
So it's not just about crunching numbers,
Right.
but also about understanding the story behind the numbers,
Yeah.
getting a holistic view of the company.
Exactly. Once you have a good grasp of the financials and the business model,
Right.
you can start to think about the company's future prospects.
Okay.
What are their growth opportunities? What are the risks they face? How are they positioned within their industry?
And that's where things get really interesting, right? It's about connecting the dots between the past, the present, and the future. Trying to anticipate where a company is headed and whether it's a journey you want to be a part of as an investor.
Precisely. And remember, there are tons of resources available to help you with your research.
Oh, yeah.
You've got company websites, financial news sites, analyst reports, and of course, investment services like those offered by the Motley Fool.
And don't forget about the power of community. Talking to other investors, sharing ideas, learning from each other's experiences can be incredibly valuable. There are so many online forums and communities dedicated to investing.
Absolutely. Investing doesn't have to be a solitary pursuit. So before we wrap up,
Yeah.
I want to leave our listener with one final thought to ponder.
I love it ending on a thought-provoking note.
We've talked a lot about how the stock market often presents opportunities when fear is high.
Right.
But how do you, as an investor, know when it's truly the time to be greedy when others are fearful, as Warren Buffett famously said? How do you distinguish between a genuine bargain and a potential value trap?
That's the question, right? That balance between, recognizing a potential buying opportunity but not getting swept up in the hype or ignoring red flags.
Exactly. It's a delicate dance. It requires careful analysis, a clear understanding of your own risk tolerance, and a willingness to think independently. You can't just blindly follow the crowd.
Well said. I think that's a perfect note to end on. This deep dive has given us a lot to think about. We've explored the potential of these three growth stocks, AMD, Amgen, and Prologis, and we've gained some valuable insights into the art and science of informed investing.
Absolutely. It's been a pleasure exploring these ideas with you. Remember, knowledge is power, especially when it comes to investing. So keep learning, keep asking questions, and keep diving deep.
Thanks for joining us on the Deep Dive.